What up, traders? What up, investors? Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. Today, we're going to be looking at a Cathie Wood stock, which she's owned for quite some time and has come down substantially, over 70% since its high. It's kind of starting to potentially break out, but without further ado, we're going to be looking at... Boom. We're going to be looking at CRISPR Therapeutics. So CRISPR Therapeutics is a therapeutic company, aka not like a pharma company, but it's in the same kind of genre. They are in the same the leader-ish. I don't know how to honestly classify it. The leader of gene based medicines. So what does that mean? They do a bunch of science stuff. You see this guy down here talking about science. This guy over here doing science. They clearly know what they're doing. Basically using genes and so many different samples on better understanding the DNA structure and creating medicines and treatments to stop some of the world's toughest diseases, from cancer to diabetes and a smorgasbord of other blood diseases as well. Very, very way above my pay grade on understanding of the science. So yeah, a lot of science behind it, but Cathie has loved this stock for quite some time. So what do I mean by that? Another great site, this is Cathie's ARC. This is a great little ETF or API call for her daily trades and her activity and so forth. You can see here on her main fund, the ARC K fund, they own quite a large portion of it. It's about 8.62 of the cap of that. So that's pretty phenomenal portion of the overall ownership of the company, which is insane. But the weight in the ETF is around 5.24. So pretty large size of it. They have a huge chunk of it, almost 10% they own in the company. This is also across her ARC G fund. They also own CRISPR within there, around $70 average. A little bit better of a position here with the ARC K at $62.32. At the same time, we're going to be jumping to the chart here in a second. This API call does a fantastic job on when they were buying and selling. You can see here they were selling when it was fairly high, when the stock was well above like almost $200. But then they've accumulated it quite over the past like 12 months and so forth. They've been buying as a air quote, buying the dip kind of scenario, Cathie here. And we're seeing a little bit of a selling actually coming in 2 days ago. They sold some shares off here on a little of a pop in the price. So without further ado, let's go look at the chart here. You can kind of see here on my basic analysis here. This is again on a weekly sign. So a weekly chart going back 5 years. This stock has been, again, beginning of 2018, in 2017 to 2018, no one gave a rat's you know what about it. Trading in around $16 to maybe $20, then had a huge ramp up on the whole gene editing stuff, then came back down to the 144 EMA here, which is that green line that we're looking at here. Kind of bounced around that, trying to come back up here. Really did not next to nothing. And then we had a huge explosion due to the Cathie Wood movement and the ARC fund kind of being very main spotlight in the media, and it had a huge run up here. Actually, this does a little bit of a better job. Really running up quite hot here, going up to $220. And we said here before that they were selling pretty hefty up here. Again, their cost basis is basically around $62, and the stock today is trading around $79. And we're seeing a little bit of pop over the past couple weeks here. This again came down from the very tippy top to the bottom just a couple weeks ago. We're looking at almost 80%. That's a pretty large haircut for most investors to withhold, even though that their cost basis was mostly built in around this time frame over here on the way down as well. So cost averaging down to whatever terminology, whatever investment thesis that you follow, they were definitely adding to the position on the way down. Some people are like, no, don't do that kind of scenario. But this is something that Cathie and ARC is a little bit more transparent on 5 to 10 years out kind of scenarios. And this is definitely something that is honestly game changing. Looking at some of the fib numbers I had up, I had a Fibonacci extensions here from the previous high to the bounce low to the next swing high, and it came pretty interesting here. We're seeing a huge little bounce here around the $44.67. So that was in around the 100 percentile move from those Fibonacci extensions here, and breaking past the 78.6 percentile move here as well, which is set $71.44. Looking for potentially a run up to the 618 would be around $92 potentially, around $92.45 to be precise out there. So running up to that, potentially maybe tapping it, and then coming back down to maybe test around 80 to 79 would be completely healthy, and completely in orderly fashion on the potential stock market move here, because you're seeing a lot of green. We're having potentially earnings coming out the end of the month. So again, with earnings, we could see a run up. With earnings as well, you see a lot more volume, a lot more volatility coming into play. So be very mindful about that if you're looking at any kind of positioning there. At the same time, we're seeing the shorter dated moving averages, which is the yellow one here, the 21 EMA, again, on a weekly chart, starting to curl back up. So it's kind of had this run up, plateaued, coming back down, and now we're going to repeat the pattern potentially, do the wave kind of pattern here, and move our way through that potential cycle as you see a lot of stocks potentially hold. Is it going to be running up to $220 anytime soon? Probably not. Like, this is a very euphoria, very overpriced, very huge amount of speculation at this time in the market. Again, you're seeing that across all the stocks that we're currently seeing, especially in the technology and speculative trades, especially a lot of the stocks that ARK has invested in that have got really ransacked with Zoom and Roku and stuff like that. But this one is, I wanted to bring this one to people's attention. I thought it was quite interesting to kind of see this potentially bounce higher. I'm always gun-ho about these innovative companies that are trying to make the world better. And I'd like to just share that. At that note, again, kind of doing a quick summary before we sign off here, we're looking for, again, potentially that 92-ish range, 92.45, potentially to run up here. If we do get a bounce off of that, we could, again, we don't have to pull back. We can easily rip higher if it wants to. Again, I'm just being conservative with some of the estimates here with the run up into earnings. I think this is a definitely some overhead pressure, because again, imagine all these weak hands that got out. Like you're seeing here on the very bottom here, a lot of red, right? So this is all people are like, oh, I give up. I'm going to kick the can, take my shares, get this thing off my balance sheets. I don't want to look at this every day. This big red number is really hurting me. At the same time, the 618 kind of lines up as well with its previous kind of a breakout and support. So I think there's going to be a lot of a magnet to this price here. And we'll see if this can maybe get a potential breakthrough again or a bounce. But again, playing this very, very close to the chest, meaning I'm not going to be putting in 100 or 20% or even on margin to buy this stock to potentially trade this. This is just something that's going to be a speculative trade without a doubt. Potentially going to be selling some premium, especially going to earnings. So we'll see on how this one plays out. But again, thank you guys from the bottom of my heart. Please don't forget to like and subscribe down below, and I'll catch you guys on the flip side or in the Discord. Peace.